Welcome to this explainer. If you've been watching defense tech stocks lately, there's a really good chance you've seen the ticker ONDS literally flashing across your screens. Today, we're unpacking exactly what is driving this stock's unbelievable momentum. We're going to look right under the hood of their financial machinery, and we'll figure out exactly what the market is betting on with these recent massive U.S. Army contracts.
So let's get right into the big question here. Ondas just secured over $50 million for tactical, lethal unmanned systems. Because of this sudden influx, investors are fiercely debating the reality behind the hype. Are we looking at a sustainable, genuine growth story, or is this high-flying stock getting dangerously ahead of itself?
Just to wrap our heads around the sheer scale we are dealing with, $982 million. Ondas is part of this massive indefinite delivery, indefinite quantity contract with the U.S. government. Their combined awards have already blown past $240 million, and production is actually underway with deliveries starting this very quarter. So this isn't just some abstract theory. The money is physically moving.
Today, we are breaking this down into 4 clear areas. First, the massive growth upside in the bull case. Second, the stark financial risks in the bear case. Third, their strategic defense position. And finally, a key investor watch list to help you track all this.
Section 1, the bull case. Rapid expansion and revenue surges. Honestly, the upside here is hard to ignore, especially when you see the top-line numbers and that recent 21% one-month stock surge. They've been completely outperforming industry peers and the broader S&P 500. The speed of this growth is just staggering. Q1 2026 revenue hit $50.1 million. That's a 10-fold increase year over year and a massive 66% jump just from the previous quarter. On top of that, their full year 2026 guidance was just bumped up to a minimum of $390 million. That new guidance, it represents an absolutely wild 670% year-over-year growth. And what's equally impressive is they're doing this while expanding their profit margins. Gross margins have gone from 35% a year earlier to a really solid 49%. Actually, their standalone product companies achieved adjusted EBITDA profitability, meaning core operational earnings are in the green, a full 6 months ahead of schedule. Now, how are they doing this? Well, it's all about a rapid M&A roll-up strategy. They aren't just building a drone company. They are piecing together a massive defense tech puzzle. In the first quarter alone, they closed 5 acquisitions. Think about the breadth of what they're doing. Mistral gives them prime contracting. Rotron adds propulsion. Worldview brings in stratospheric capabilities. And then you have the massive $875.8 million DZYNE acquisition for counter-UAS and ISR, plus Omnisys for battlefield software. The takeaway here is that Ondas is building a comprehensive multi-domain autonomy platform. Because of this aggressive strategy, their pro forma backlog has absolutely skyrocketed from $68.3 million to $457 million. It's a huge wave of future guaranteed revenue, and it's exactly what's pushing analyst consensus price targets to an average of around $20 a share. Moving to Section 2, the bear case, valuation disconnect and execution risks. We really have to flip the script here, because as incredible as those numbers are, the financial machinery running underneath reveals some very real burdens. Here's the rub. There is an intense valuation disconnect going on. Ondas is trading with a market cap hovering right around $5.2 billion. Yet their trailing revenue was only $96.6 million. That means the stock trades at a price-to-sales ratio near 54 times. To put it bluntly, the core business is still unprofitable at the consolidated level, posting a Q1 operating loss of $42.7 million. And hey, a quick word of warning on this. If you pull up your favorite stock screener and see a trailing PE ratio of roughly 21 times, do not fall for it. That metric is totally artificially skewed. It reflects a massive one-time non-cash gain from warrant revaluation. It has absolutely zero to do with actual underlying operational cash generation. Which brings us to the execution risk timeline. Management is calling Q2 2026 the peak loss period. Sure, standalone products are profitable, but merging all those different acquired companies we just talked about is a monumental challenge. Because of that integration load, company-wide adjusted EBITDA break-even isn't expected until Q1 2028. That's a long time for investors to wait. Now, they do have a safety net, a massive $1.48 billion in cash and investments. But, and this is a big but, they're burning through it at a fiery rate of over $51.3 million per quarter. That gives them runway for sure, but it really highlights just how capital-intensive this roll-up strategy is. You have to spend big to integrate big. Unsurprisingly, the broader market is completely split on whether they can survive this cash burn and actually pull this off. A staggering 40% of outstanding shares are currently sold short. That means there's a massive contingent of traders actively betting against the stock, creating the potential for some incredibly sharp volatility whenever news drops.
All right, Section 3, Strategic Defense Position and U.S. Ecosystem Integration. If we look past the crazy financials for a second, why is the U.S. military pouring so much money into their platforms? Well, the answer largely lies with their subsidiary, Mistral. They act as a prime contractor bringing critical U.S.-based manufacturing, assembly, and integration right to the table.
It all starts with the Hero 120 loitering munition, the cornerstone of these recent Army orders. The specs are seriously impressive. A proven, combat-tested system, 60 minutes of loitering endurance, multi-purpose warhead options, and a range well over 60 kilometers. U.S. forces aren't just doing small tests with these anymore. They are ordering them by the thousands.
And looking ahead, there is a giant catalyst looming. Ondas submitted their purpose-built WASP platform for the Drone Dominance Program, or DDP. This is a $1 billion Department of Defense initiative to rapidly field up to 340,000 small attack, unmanned aerial systems. To put 340,000 drones in perspective, that's enough to literally fill the sky over a mid-sized American city. Crucially, this requires domestic manufacturing, which Ondas secured through a partnership with Kitron in Pennsylvania. A win here would be monumental validation. They're also going after something called Project Hives. This takes their capabilities beyond just the battlefield and into national border protection. It's an ambitious plan deploying thousands of drones for phased intelligence, surveillance, reconnaissance, and assault ops. We're talking about another multi-year revenue stream with the potential to easily exceed $100 million.
Finally, Section 4, Key Investor Watch List, 4 pillars to track. So, bringing everything together, unprecedented growth on one hand, severe valuation and execution risks on the other. How do you actually evaluate a stock like this moving forward? Well, here is your 4-part checklist. Number 1, keep a really close eye on Q2 earnings. Management called it the peak loss period, so seeing actual signs of EBITDA improvement is absolutely vital. Number 2, track how well they convert that $457 million backlog into real cash flow, starting with $190.8 million Army order deliveries this quarter. Number 3, stay alert for any DDP catalyst wins. And number 4, always factor in that extreme 54 times sales valuation into your own personal risk tolerance. At the end of the day, Ondas is an incredibly high-octane growth narrative for folks with a high risk tolerance and a long-term horizon. But at these premiums, the margin for error is basically zero. They are priced for near-perfect execution. Any hiccups with integration or delayed delivery could trigger a severe reality check. So as that massive $457 million backlog starts to materialize this quarter, you have to ask yourself, will Ondas flawlessly integrate this sprawling new empire to dominate the skies, or will the weight of their own cash burn bring them crashing right back down to earth? Ensure you do your own due diligence, and we'll see you on the next explainer.